Probably few people expected the market to recover so fast from the drawdown we have seen earlier this year and now to reach all-time high. The adoption of technologies really happens across every single industry of the economy, like from finance, to industrials, to healthcare, and so on. Don't overreact, which it seems something easy, but in the investment world, it's actually not that easy.
So back to what I was saying. Could be us.
Hi everyone, welcome to the Beansprout Podcast. My name is Gerald and today I'm at Moofest, which brings together investors in Singapore for a day of learning, networking, as well as inspiration. Today I am joined by Christian Mariani, who is the US Equity Investment Specialist at 𝗕𝗵𝗿𝘀 Asset Management. In his role, Christian would be advising clients as well as different stakeholders to understand the market outlook and help them to position for the markets. Hi Christian, welcome to Moofest 2025.
Well, thank you. Thanks Beansprout for having me.
So we have seen actually the markets being very volatile in the first half of the year. We saw the stock markets actually having a sell down with the US tariffs, but now we have the US market actually back to the all-time highs. Can you help investors to understand some of these key trends in the market?
Yeah, sure. So, well, first of all, I'd say probably few people expected the market to recover so fast from the drawdown we have seen earlier this year and now to reach all-time high. I think when you think forward, I will say on the macro side of things, there is still a lot of uncertainty. A lot of related to the policies coming out from the US, like President Trump, and I think that will continue over the next few quarters into the later part of this year. At the same time, I would say when you look at corporate fundamentals, US companies are actually still doing quite well, especially when you think about technology, the exposure to AI, and overall earnings growth is actually being pretty good. But I would say again, when you think forward over the next couple of quarters, I do think we might see again volatility, and that's because valuation are quite elevated in the market, so the starting point is quite high, and also you still potentially see some risks coming in terms of slower economic growth in the US. Potentially margins for companies may be impacted by tariffs as well. But overall, I would say the underlying fundamentals are still pretty good at the moment.
So I am definitely surprised by the speed of the recovery. I think after the correction in the S&P 500, after the Liberation Day tariffs, we saw that the market has recovered very strongly. So going into the second half of the year, are there some key things that you'll be looking out for to understand where the market is headed?
Yeah, sure. I think it's going to be important to see companies' earnings, how that is going to progress over the next couple of quarters. Because ultimately, when you look over the long term, the stock market goes higher if earnings goes higher at the same time. So I think that will be critical. And especially when you have a valuation starting point which is quite elevated, you want to be able to see earnings deliver on that. So I think that is going to be crucial on one side. As we move towards 2026, I think more on the macro side, everybody has been very negative about President Trump and kind of the uncertainty coming out of Washington, D.C. But I think there will be some upside potentially coming from fiscal policy impact on the economy being positive into 2026. So we might see some volatility in the next couple of quarters, but then maybe a better setup into 2026.
So one of the key themes you mentioned earlier was this interest around artificial intelligence or AI. Do you expect that the theme will continue to play out for the rest of 2025 and into 2026?
Well, I think it's not just 2025 or 26. It's really a secular growth story here. Obviously there is some concern around the return on investment on a lot of the capex by the mega cap technology companies. But so far, capex has been has continued on that, and I think companies want to invest right now because 1 year, 2 years, 3 years from now, then they start to reap the benefit of that. And I think once you start to get, right now there are different phases of AI. I think right now it's still the early stage. Once you start to move into what we call digital AI type of solution, That will be the first phase, and then the final one will be very much like what we call physical AI. So imagine like robotics with like AI, like powered type of solution, which we do think is going to have a high return on investment over time. But in between, you might see some bumps along the road, and that happens with any kind of new technological innovation. If you think about the internet, across different cycles, so that may happen at some time.
Okay, so I have been learning a lot about AI over the past 12 months, both from my work purposes and also for investment purposes. But two of the things that you shared earlier would be physical AI as well as digital AI. Can you help us understand a bit more about these two concepts?
Yeah, I would say so. When you think about most of the current application of AI, it's very much like in terms of within the enterprises mostly, like to try to reduce costs. And then secondly, in terms of consumer related, is more about like things such as large language models, like maybe AI agents, which tends to be digital in nature in itself. Like, so you can think about maybe software companies using AI to provide solutions for clients, or something like a travel agents, which could be AI powered over time. So that's kind of like in the digital side of things. In terms of the physical AI, is really when you think about the application across like the industrial side of the economy, I would say, and that's why I made the example of like robotics and AI-powered robots, and that could be a game changer if you think about like the industrial sector, for example.
So to sum up, most of what our focus has been so far would be on the semiconductor companies. As we move further towards the development of AI, we should also be keeping a lookout for software companies as well as some of these industrial companies.
Yeah, for sure. I would say across like industries, the AI story is not really just confined to tech, and that's very much, I would say, actually the story of like technology, which over time it used to be traditional tech, semiconductor and software, but over time the adoption of technologies really happens across every single industry of the economy, like from finance, like to industrials, to healthcare, and so on.
Another key theme within AI would be the development of Chinese software companies such as DeepSeek. It definitely caused a lot of volatility amongst the US tech stocks in the first half of the year. Do you see that continuing to pose a threat towards US equities?
I wouldn't say it's a threat. I would just say it's actually the proof that innovation can come from everywhere. It's not just confined to one single country or region. It can come from everywhere, and that innovation can actually benefit the world, not just like one single country.
Another key theme for the market will be interest rate expectations. We have seen the Fed actually pausing on the interest rate cuts in the first half of this year. What are your expectations on interest rates in the second half of the year, and how do we see that impacting the markets?
Well, I would say that is going to be very much dependent on a few things. One is like economic growth into the second half of the year. The second one being inflation. So I think the Fed is not in an easy position, because on one side you want to make sure that the economy and the job market is still relatively supported, but on the other hand you might see that temporary increase in inflation because of the impact of tariffs on that. So I would say overall we're not expecting major rate cuts this year. I would say the overall view, different teams will have slightly different view, but overall maybe one cut by the Fed, maximum two this year. So we're not looking for materially lower rates at this point in time.
So against this backdrop, we've actually seen interest rates coming down in the US. Even though they've been volatile, it appears harder to be generating income in this environment. For an investor who is looking at income in his or her portfolio, how should we think about income opportunities in the year ahead?
Yeah, so I'm going to answer this question more from an equity perspective, as I'm from the equity team. And I would say actually when you think about US equity, income generation from stocks like dividends, it's even more challenging, because if you look at the large cap US dividend yield, generally is pretty low. So you are looking at less than 2% on average. The S&P 500 has around 1.5% over time of dividend yield. So I think there needs to be other ways of generating income, and for us one which can really help like clients, like on the equity side of things, is really combining an active equity portfolio with an option overlay on top of that. So a cover-a-call type of like structure, type of products, and that's also something which can benefit from volatility in the market, because the higher the volatility, the higher the income generation, like from like selling options on top of an equity portfolio of that. So that could be an interesting way, I would say, for clients which are looking for high income, also a more diversified source of income which is less reliant on interest rates, and third, one which is also positively correlated to volatility. And I think there is a lot of uncertainty in the market, and I think we could expect volatility to stay higher for longer, and that should benefit income generation within these type of strategies.
So for investors who are new to options investing, one of the terms you mentioned earlier was covered calls. Can you maybe just explain to us what does covered call mean?
Yeah, sure. So I try to make it very simple, but imagine you own a portfolio of stocks or even just one stock, and then you're selling a call option like on that portfolio of like stocks. Usually it could be an index option. So if you have a US large cap portfolio, you're using a US large cap index option to sell on top of it. When you sell an option, you get paid what's called an option premium, and that option premium is considered as like an income component, like within the strategy in itself. So again, in essence, a covered call is like owning a portfolio of equities or a stock, selling call option on top of that portfolio or that stock to generate like income in forms of like option premium. I would say what are the benefits, what are maybe like some of the things to keep in mind of this approach. One is that higher income generation from volatility, because option prices are correlated to volatility, implied volatility in the equity markets. Second is once you sell options on top of an equity portfolio, you reduce your overall beta and volatility of that portfolio. And then third one is I'm gonna get paid that income, but at the same time I'm potentially giving up some of the upside. At some point, if the market rallies a lot, you might give up some of the upside on that.
So if that is too complex for an individual investor to be able to execute by himself or herself, is there a way that investors can gain access to that in a more simple way?
Well, I would say nowadays in the markets, like there are different strategies which can be found like across platforms. For example, where investor can effectively get exposed to these type of strategies across, I would say, different markets as well, like perhaps like US like focus type of strategies as well as global focus type of strategies and so on. So I would say nowadays like investors have a lot of options to pick from, across platforms and so on.
Yes, that's definitely something that we see as well. Many of our readers have asked us what are the different ways that they can gain access to some of these different strategies, different products in the market. But I think to be able to do that, they need to be able to be more well equipped in terms of their investment knowledge. And that's where the sharing around the financial education becomes very important. Maybe for yourself, is there a book or any materials that has been very helpful to you in your financial journey and has helped you to understand the financial markets better?
Well, there are probably many. I would just pick one. I would say probably Poor Charlie's Almanac, which by Charlie Munger. And I think that's really good because, especially as I think about like retail investors, it's really a lesson. It's part a biography about like a great investor. It's part like a lessons on life and also on psychology of investing, and partly also an investing manual in itself. So I think sometimes a book may be too technical, and in this case I think it is actually a good mix of story as well as like lessons of life as well as like investing.
Yes, I have 2 copies of the book at home, and happy to share that with any reader who would like a copy as well. Okay, I think one of the things that you mentioned is the psychology of investing. I think that's very important as well, because when it comes to investing, a lot of it comes down to controlling your emotions, not making decisions based on fear or panic. what is one important investment psychology that you think is important and you have actually tried to be able to shape to be able to have a better investment outcome?
Yeah, I'll be very simple here. I would say don't overreact, which it seems something easy, but in the investment world, it's actually not that easy. And I think that's very important. You don't want to overreact because, just to give you an example, we talk about how the market recovers so fast. And if you overreacted while the market was selling off earlier this year, you just want to get out of the market and just stay out because of fear, you would have missed out on that, the market rebound. So I think it's very important to just be calm, again, don't overreact, just think of a longer term perspective.
Yes, I think that's very true because when we saw the S&P 500 correcting from 6,100 points to 5,200 points at one point in time, we got many questions from investors. Oh, should we sell? Is there more downside? Will we see a change in the world order because of the tariffs? But actually since then, we have seen the markets recovering very strongly. So I think that is probably your point made around not overreacting, because as we try to understand some of these developments, and maybe they may not impact our portfolios as much as what we actually fear.
Absolutely.
And maybe as we come to the end of today's podcast, are there key tips that you want to share with investors from your own investing journey and your experience in the investment world?
Well, I would say, probably a few things. One is just do your own research. I think you need to spend some time to understand what's happening in the market. What are you going to invest or what do you want to invest in before to make a decision. So I think it's really important to spend time and to make an informed decision. And then at the same time, I would say just be open, consider, don't just focus on one single team or one single industry or one single region. I think one needs to be open, to invest in a diversified way across multiple markets, multiple asset classes over time as well.
So for Beansprout, we always believe in educating ourselves about the financial markets, doing your own due diligence, which is why we share insights with our readers. And I think I also managed to learn something from you today. That's something that I haven't really heard of in the past around how we can generate income in the US market through some of these option strategies. So thanks so much, Christian, for sharing your insights with us today. I'm sure readers will look forward to hearing more from you, from your colleagues at 𝗵𝗵 Asset Management as we continue to navigate the markets in the second half of this year.
Great, thank you.
Thanks so much for joining the Beansprout Podcast at Moofest 2025.
Thank you.
Thank you.